should you buy this dip, I'm sure is what you're wondering now. The average trader and investor, and probably you watching this video, is thinking, oh my god, we touched off the moving average, we used it as support, and now I'm going to buy this dip. Well, there are a few things I think you should know before you do that. Okay, it's always going to be uncertainty in times like this, and so I just want to do my job and help you prepare for what this market could be giving you. Okay, so the first thing I want to explain to you in this video is how obviously growth stocks have hit a peak here currently. They're getting completely hammered, and so these are obviously our market leaders. Now, if our market leaders are getting hammered, who is keeping this market up right now? Because currently the technology sector is obviously selling off much harder than the overall market. So technology is getting screwed, but obviously the market is outperforming technology right now because we have these other sectors to keep us up. So who's keeping us up right now? Well, that's going to be banks. Okay, and it's also going to be, travel stocks. Okay, now I know travel stocks aren't a large portion of the S&P 500, obviously, but here's another bullish sector currently is energy. So right off the bat, this is how you know that we are not in a crash currently, because you still have some very bullish sectors. This is what a lot of people would call a rotation out of tech, right? But they're saying this is a rotation from tech to value stocks, but I want to disprove that right now and tell you why you should be so wary and really scared to buy this dip right now. Because, okay, yes, they're rotating out of growth stocks. That's a fact. Okay, they're getting completely hammered. Tesla's crashed 30% in just the last month. And so once again, now we're going to the other sectors to see, okay, where are we getting any bullishness from right now, right? Because technology is crashing so hard right now that the market should be down way more. But once again, we're not dropping that hard because it's a collective effort. It's an overall ETF, or we're going to have the support of these other sectors. And so guess who we're relying on right now, guys? We're relying on travel stocks. We're relying on banks and energy. And what I need you to understand is that these are so disgustingly priced right now. And so what you're going to think is, you might be offended right now. I just said your travel stock is overpriced. You're thinking, are you stupid? Come on, man. Travel stocks are about to recover in a year. They're so undervalued. That's why we're shifting into these value stocks. But what you don't realize is that we're trading higher currently in these value stocks, in these travel stocks. We're trading higher now than we were pre-pandemic. So if you are buying RCL right now, if you're buying Delta Airlines right now, you are literally saying that this company is stronger than it was back before the pandemic and the crash hit. And that's not true. That's absolutely not justified. It's horrible if you think that, and you need to get your head checked. Okay, so once again, so many people have this growth versus value narrative. They think that, hey, we're shifting into value stocks, but there's nothing valuable about these dog shit stocks right now. You do not want to buy travel stocks. They're fucking horrible right now. You see what I'm saying? They're literally more valuable now than they were before the pandemic. And that's just, once again, that is not justifiable. Okay, they literally have negative EPS currently here, literally losing $5 a share. Whereas if we go back to March of last year, around that time we were positive $1.30 per share, right? So we're 6 times worse, or not even 6 times. We're just disgustingly worse compared to where we were last year. Yet we're trading at the higher level. So if this is the sectors you're relying on, these sectors that are trading higher, that are grossly overvalued, yet everyone's calling them highly valued, right? Undervalued, then this market is really holding on to its last string right now. Because once again, as soon as travel stocks, if these guys start to correct, guess what the narrative is going to be then? Investors are worried about the recovery of a pandemic, right? So everyone listens to the news headlines. They don't look at the charts, right? You probably didn't even know that we're trading higher than we were pre-pandemic if you're the average investor trader who's getting into these value stocks, right? Once again, that's easily disproved because we have negative EPS at these levels, and so everyone's buying this because they think we're going to recover. They can't even face the simple facts, right? So when you are relying on these sectors, and once again, look, banks, right? If we go to KRE, the bank sector, they're highly bullish, right? They look great right now, okay? But once again, they're highly overbought. You can see that in the RSI indicator if you believe in that indicator. Now, look, I'm not someone to really give all my focus and attention to an indicator and say, oh, we're overbought, so that means banks have to correct. No, they don't have to correct, but what I am saying is that at these levels, okay, you're basically holding on to that last string where you are depending on banks, energy, and travel stocks. And once again, I don't know who wants to buy travel stocks at these levels. I know I would never buy travel stocks at these levels. So if that's one of our sectors that is not reliable right now, that's fucking horrible, okay? These guys can easily fall out, which is going to trigger the domino effect. When these guys fall out, guess who else can fall out? guess who else is highly overbought and start dropping at any moment, right? Not just because it doesn't have to drop just because it's, we don't have to crash here. We just need to drop a little. Why? Because look at the, how much we're up right now, right? We're up over 10 points in the bank sector in just the last month, right? So it's a crazy rate of growth. It's super, super bullish. But the number one reason for a stock or an ETF or anything to go down is because the fact it just went up. So once again, when these are so overbought, it's going to be hard to push these much higher. And if you can't push these much higher, it's going to just add that much more bearish pressure to the market and to these, growth stocks that are underperforming currently. Okay, so it puts you in an absolute horrible position currently to be buying this dip because you don't really have any bullish sectors. Okay, for the market to move higher, you are going to need energy, you're going to need travel stocks, and you are going to need banks to push that much higher because they need to carry the weight of these growth stocks. So this puts us in either a neutral trend for the S&P or a bearish trend for the S&P going forward here. Now, what I want you to realize is things don't drop in a straight line. So take a look at the crash last year, right? Look at this. We'll have 5 consecutive down days and then a big up day, right? Then we'll drop, then another big update, then we'll drop, right? So things don't drop in a straight line. So when you see here on the intraday chart, maybe you're trading, maybe you're looking at some things and you see, oh my God, we bounced 40 points. It's not the bigger picture. Zoom out. What's really happening? What sectors do we have that are bullish? Obviously, you have a few bullish sectors, but they're at their absolute peaks, right? How much higher can they go? The answer is not much, and that puts a lot of pressure at these levels, and that's why we have so much more downside. When you measure the downside potential, right, the average crash, right, let's say we're preparing for the worst case scenario, an average crash is going to have a 15% drop, 20% drop. So we can still drop down a whole nother, 800 points here, okay? And that's not out of the question if this is the worst case scenario. Now, let's say the best case scenario is we rise back up to the all-time high. You have about 3 to 4% to gain, and you have a whole nother 10% to lose if this thing doesn't recover. Once again, you see all the bearish factors right now. You see all the sectors that are involved in this whole thing. So for that reason, I am not bullish at these levels. I do not give into this moving average, and I hope you understand my point of view. That being said, if you do buy the dip, if you are bullish, I wish you the best of luck always. But I just want to share with you some of the things that I'm seeing here, why I'm still not bullish. Okay, another thing I want to point out, look, head and shoulders, which is a basic chart pattern that you should definitely learn if you don't know it. We broke below that, okay? There's nothing bullish about the current position that we're in right now. So when you see these things bouncing, you need to be checking the volume. So today, when we bounced 40 points higher, look at the volume. It actually decreased on the way up. That's not a good sign, okay? So always be paying attention to all the factors going on. So don't become so biased that you become blind to the facts of the other side that opposes you. And with that being said, guys, if you want to trade with me, if you don't make at least $10,000 in your first week trading with me, you get a full refund. So that link's going to be down in the description. Once again, you get at least $10,000 in profits your first week. If you don't make $10,000 your first week trading with me, full refund. No questions asked. So that's what I've got for you there. And at the end of the day, here's the last thing I want to point out. Okay, just real quickly. Okay, realize markets, things don't drop in a straight line, so expect counterbalances. We're going to have a couple green days, I'm sure, here in the future, and just be ready for them. That doesn't mean that, we're not heading lower ultimately, okay? So be ready for that, guys. Thank you for watching. Schedule a 20-minute call. Check the link in the description, and let's make some money this week. I'll see you very soon. Bye.